Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Friday, April 28th, 2023. It's now the 27th. We start off in the S&P 500 daily chart in DeMark, looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup one count. And to negate that for end of day on the 28th, there must be a close below 4137.04 for the price flip back to the buy setup count one. So there was yet another price flip, and this one lost the buy setup 6 count could have printed today. And now the closing price for the 27th went above the closing price for the bar on the 5th. So price is going to have to tick lower than this close before we even get another chance to print the buy countdown sequential 13. So however far this updraft takes us, that will be hanging over our heads. And the small handful of big fat cap megatechs taketh away on the 25th and giveth back on the 27th. And it was close, but no cigar for getting the disqualified 50% momentum up for propulsion qualified today, as the close would have needed to get above that disqualified momentum up level. So the only level in danger of becoming qualified for end of day on the 28th would be this trend factor disqualified down one with a close under its level there. And that would have to go through the conversion line first and the Stark band, mid band also, and then find very good support around this area, channel 3 low, the lower band of the Stark bands, and I believe the Bollinger Band is around there too, lower Bollinger Band, and the baseline is in that area too, so there's pretty good support here. And again, the least that the price for S&P 500 could do for us would be to tick higher than this high on the 18th, so that the D wave up wave 3 can print at least, and that would be another swing high over here, and price would have to open above both of these ongoing supply lines. This one for today is at 4165.43, and this one is at 4191.56. And if that happens and there's a close above it also, either one of these levels, then these two ongoing supply lines will become disqualified. And you can see that the close minus the low for the 27th, and take that difference and add it back to the close, that brings it up to 4194.80. And that's what I mean by it has to open above these supply lines and close above them for end of day on the 28th. The NASDAQ 100 NDXHILO chart shows that it had a couple of failures going both ways here. The first one was to the upside and then the downside, and Rock 12 was well out of the range of plus or minus 5 from 0, and now it looks like it's going to try again to the downside. So the blue 5 EMA is just about right on top of the 10 EMA, and the Rock is right at 0, just about negative 0.41. The short-term KST did make it back above 0 line and crossed its signal line right under 0, intermediate term KST is rolled over and headed down, and the long-term KST still wants to stay headed towards the upside to the right. But as you can see in the main window here, the long-term KST is getting up near some of those nosebleed areas that it has been in the past before it rolled over. And the NASDAQ composite itself did have that failure to the downside where the blue 5 EMA went under the red 10 EMA, but rock was well below 0 and -5 when that happened, so that shows no indication of rolling back around to the upside yet. And the New York high-low did have the 5 EMA cross under the red 10 EMA, but that happened well below -5. It happened at -12.58, so that's not my sell signal. And all KSTs are pointed down. The short-term KST just crossed under 0 and is pointed down slightly. The intermediate term KST is rolling over to the downside, and the long-term KST is pretty much pointed straight down. The S&P 500 support and resistance levels big board chart shows the gray areas are at the pivot point, the 20 simple moving average, and the daily conversion line. And price in the pre-market hours for the S&P 500 at 6:20 a.m. on the 28th is 41.19. So to the downside, it takes a significant jump down to S1. Top of the cloud, 26 bars back concerning the lagging line. Daily horizontal support from 0407.21 and the 21 EMA. Same thing with to the upside, it takes a significant jump up to R1, the daily ongoing supply line, and the daily Bollinger Band upper band. S&P 500 daily AD line along with the NASDAQ 100 daily AD line did make it above their 21 EMA lines respectively. And the ROC 1 pretty much nailed the euphoric state line at positive 2.0. It's the antithesis of the pain threshold at negative 2.0. And the ATR2 popped up out of its green zone at 62.82. And the PPO extreme made it almost up to 3%, 2.97, right on top or a little below the PPO level 5 at 2.99. And the New York traditional McClellan breath oscillator to get back to 0 would require 734 advancers over decliners to get back to 0. An incredible improvement from where it was yesterday. Have a great day.